So like I said, I don't like going, okay, let me go short right here, right? Or let me go short right here, because I don't know if they're going to come down here or they're going to trap it. So all I like to do is I want them to trap, I want them to take out the nadir, and then I want to go short, right? I don't really care what happens up here. I care what happens over here, and I care what happens on TDI, right? So here they give you an outside the band, inside the band, right? But in most cases, I want this little trap and break, unless this is very wide. So for example, it's really wide and they give me an M over here and I have enough distance from here to here, then I'll take that trade. Otherwise I won't do it. Okay, just to be on the safe side. All right, look at how tiny this one is, right? Somebody asked me how many candles constitute an M structure, right? So your M structure is going to start from you're going to start counting from the tip of the first leg, right? So you're going to go that wherever that is. So if that happens to be this candle, this candle, then you're going to start counting from here for an M structure. So in this example, that'll be the highest point, which is the outside the band move, and then you're going to start counting from there, right? So in this example, because unless you get outside the band, which is your outside structure, right, you can't start counting. You can't count it because you don't know. Let's say I don't know if this is my highest point. I can have another candle above it, right? So I'm not going to know, right? When do you start really counting is when this candle comes back and closes below 13 and closes back above the 13. That's when you say, okay, that's potentially my first leg, and it's going to be outside the band like that, right? So you're doing two things. You want to make sure that it goes below and then back above. So you're like, okay, cool, that could be my first leg, considering the fact that I got outside the band, I got a 50-200 cross. Very likely it's going to be out. That very likely is going to be my first leg. So you start counting from the high of the first leg. So you go 1, 2, 3, 4, 5, 6. The minimum candles required to create an M structure is 6 candles. Somebody did ask me that. I think I posted it somewhere. I can't remember where. But that's the 6 candle. You start counting, not from here, not from whenever you decide to count. You always count from the candle that creates the outside structure, the highest candle. So if this is my highest candle and it's outside the band, then I start counting from this candle. 1, 2, 3, 4, 5, 6, like that. All right. So the least amount of candles to create an M structure is 6, counting from here. 1, 2, 3, 4, 5. The 6th candle got to be the shift candle. Your entry is going to be on the 7th candle. So it takes 6 candles, starting from the highest point, which is outside the band move. 6 candles minimum to create an M structure. It can take more. It's never going to take less. Right? Very, 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 very rare you're going to get less where it comes back railroad tracks. So it's going to create a star and then going to create railroad tracks. So you're going to get 1, 2, 3, 4 candles. But that's very, very rare. Most of the time it's going to be 6 candles minimum. Okay? If it's less than that, if it's 4 candles, a quarter wood, right? It's going to go boom, 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 like that. It'll create a quarter wood. So that's the whole different thing. Okay? So here, close below 13, back above, back below. And then it goes short from here like this. See, RSI line is always below the signal line, below the market baseline. All right. You see, that's why you trade in line with the 50-200 cross. 50-200 cross. Excuse me. So you got a trap, and then most people will be like, oh, I'm going to short here, but I don't like doing that. I want price to take out the nadir to be sure, right? So if you go short here, first of all, right, RSI line is below the market baseline, but you don't know if this is going to come back up, which they did. You have taken a scratch on this trade, right? So you don't want to do that. Once it takes out the nadir, then you're ready to go. This, as you can see, is way more than 6 candles. The 6 candle is the minimum, not the max, the min. Right? GU, same thing. I'm trading in line with the 50-200. That's why it's so nice to trade in line with the 50-200. Right? So this is the A top. And then induce, they come back, they hit it. Like I said, once they throw these pins, you see they didn't trap the move, they throw 2 pins. I'm not a big fan of that, because then they can go pin 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 pin. Guess what happened? They close back above the 13, you made 4 pips, and you sat there for 1 2 3 4 5 6 7 8 9 10 11 12, more than 3 hours, and you took a scratch, right? So when they throw these pins, I'm not a big fan of them, but especially on the blue tracer. But when they trap it, a different story, right? When they trap it, then they're very likely going to break through it. Right, so here's my M structure. Boom. See, they create an outside the band, you got an outside the band, so this is nothing, right? You got an outside the band, you got an inside the band. You can see the full blue Bollinger, right there. 1 2 3 4 5 6 7th candle. Boom, short. Railroad tracks, right? That's an M structure right there. If that's my first leg, how do I know? Because I got it outside the band. I cannot have more than 4 candles above the first leg. 4 candles being a quarter wood, right? Look at GJ. See, level 2, 5200 cross. I'm trading in line with the trend. Boom, outside structure, right? Outside the band, inside the band. Can touch this until when? RSI below the signal line, below the market baseline. Now sometimes I told you, so this is my candle that shifts too, right? It does take out the nadir, it does close below, it's perfect, but my RSI line is not below the market baseline. What you can do is you can allow yourself one more candle after that, provided that candle not very big. Right now, I would prefer if they threw a pin and touch the 13. Why? Because if I take the trade and if that one touched the 13, I'm going to put my stop right above that candle. Since this candle did not throw a pin, above and touch the 13 EMA, I cannot take my trade and put my stop right above there, right? It's not kosher. So what I would do normally when instead of taking the trade right here on the shift candle, but I take on the second candle, what I do is I fib the 2 candles, so I get a 1/3 pullback, and that's where I usually take my trade. Most of the time it's going to come right to it, and it's going to hold you by the spread if you put a pending on the script. So the minute it comes down and taps it, you just have to drop a market order right there on the 1/3 on the 1/3 pullback, and then you put your stop right above this candle. Why? Because that is the correct shift candle. You just happen to enter one more candle because your RSI signal line is not confirmed yet, right? So if you take this trade right here, stop goes above 18 pips, and then it just runs, right? Your trap volume is sitting down here, so you should take this trade and hold it for almost 1 to 2. All right, that will create the RSI below signal line, below the market baseline. So you allowed one more candle to make sure RSI is below the market baseline. Okay, here's a nice W structure. Close above 13, back below, back above. Instead of taking the trade here, if I don't know it's going to come back and give me a second leg or third leg or whatever, just wait for them to shift, take out the apex in this example. See, RSI above the signal line, above the market baseline. What else is nice is you got an outside the band, you got a baseline bounce for the second leg. All right, that makes it nicer. Followed by 1350 cross, pull back, 1/3 pullback, long. ID move, right? Actually, it's a static bounce. Market baseline below, so this is a ID static, intraday static bounce. Nice. GA. Take a look at this one, right? Outside, it goes below the 200 EMA, creates the outside the band, right? Outside the band, inside the band. Now you're like, how? Well, that is inside the band. How do you know it's the baseline bounce? It's the baseline bounce because your signal line goes above the market baseline. Once the signal line goes above the market baseline and this one does this move, it's considered a baseline bounce, right? If you notice the previous one, it's also like a baseline bounce. You notice the one before that, it is not a baseline bounce. It's outside the band, inside the band move, right? So the stronger ones is where the second leg is the baseline bounce. The signal line got to be above, has gone above the market baseline. See, the signal has gone above the market baseline, slightly below, and then that's your move, right? This is actually a W structure with the second leg below, so you got divergence. That's when I'll take this trade without taking it off the apex, right? So if I get the second leg going below the first leg and you're having TDI divergence, that's when I just take it without waiting for it to take out the apex. In most other cases, right? In most of the cases, you see the second leg did not go below the first leg, so I just wait for it to take out the apex, right? This one did not go above, so I wait for it to take out the apex, the nadir in this example. Okay, just, you know, better safe than sorry, right? So if the second leg goes below the first leg, the minute this shifts above the 13, I'm ready to go. As long as it's, you know, it's not, as long as this thing didn't shift and close below the water, right? Then I gotta wait for a second candle. Okay. See, both are inside the band. Both are inside the band, right? So you got an M structure here with both inside the band. But if you notice, in this example, what's good about it is not only is the RSI line below the market baseline, but your signal is also below the market baseline. All right, making it a stronger setup. If you look at the previous ones, right, this one signal line happens to be above, which is, that's why it runs, right? Signal line is above, it runs. Signal line is above in this example, hasn't crossed yet, it still runs, but it has taken out the nadir. So you have to look at variations on what makes it. So in this example, right, in the other example, you see them trap the water, trap the water, trap the water, did not trap the water. Then you're like, wait, you like them to trap the water before they break. Why did you not wait for the trap and break over here on the water? It's because my signal line is below the market baseline, then I don't have to. Right? So if my signal line was above the market baseline, ideally, then I'll wait for the trap and break over here. Right? Alright, I think I got 2 more to go. Okay, nice big hit, outside the band, inside the band, inside the band, right? Can't take the trade until when? RSI above the signal line, above the market baseline. Guess what? Boom, that's my move, right? So if I measure from here to here, and I got about 11 pips, should have about close to 11 pips in here, right? So that's what I mean by, if there's enough distance, you can go. Now if you don't have enough distance, then you can go. Alright, level 2, W off the Mayo long. Okay, finally, so here's an example of M of the blueberry. So this is very nice, right? You got a nice outside the band, but this really doesn't matter. It didn't close below the, never close below the 13 anyway. It's like an advanced M structure, right? Kind of, sort of, right? RSI below signal line, below the market baseline, you go short on the first leg, and it comes right back, you take the second leg, right? But let's presume that we're looking at this move. So this is my outside the band, inside the band, making it a baseline bounce. Really nice. All right. See, signal line is clearly below it when it did a baseline bounce. Okay. So candle is a little bit big. If you measure from here to here, it's like 8 pips. So obviously is almost 20, more than 15%. Let's put it that way. So my foot soldier is going to go here. My full position is going to go here. You're like, well, you're taking it between the EMAs. Watch, hear me out, right? So I'm going to put my stop right here. I got a 5 pip stop. From here to here, more than 5 pips. I'm going to take that trade. As long as I have enough distance to where a potential reversal area is going to be. Why is that a potential reversal area? Because I got a blue tracer, and I got the water, and I got a 50-200 pointing up. So here's a very big reversal area. Okay, so that's why I have to wait for this deep pullback, right, for me to take that trade. So I got a 5 pips here, I got at least a 5 pips here, 7 pips here, and then it just runs. Okay, you got a 5 pip stop, it runs 20, so you're gonna get what? 1 to 4, 1 to 3, right? And your foot soldier, smaller position, gonna get picked up on the previous candle, and then your bigger position will get picked up by the second candle. I like to get in by the third candle latest, right? By the third candle, if I don't get picked up, I cancel my position, whatever it is. So if it only picks up my footy and it messes around, and by the third candle closes, I'm like almost here, but it never picked me up, I'm just going to close my position. I'm going to get rid of that, my full position. So it got to be, both my positions got to be picked up within 3 candles, otherwise it's gone, done. All right. I don't want it to go again. If it comes down and it bounces off the EMA, then comes right back, I'm going to close it. I'm going to close it anyway. It doesn't matter. It's going to be done. Right. So if it bounces off a potential take profit area, and I haven't hit TP yet for whatever reason, then I would have to close my position. Right, because there's volume trapped and they're bouncing off that area. So I don't know if it's going to go the other direction. Right. All right, let's see any other questions you guys have. All right. Do you always need a trap and break? As I explained, not necessarily. If I have enough distance, I don't need it. If I don't have enough distance, kind of tight, almost 1-to-1, close to 1-to-1 between my stop and where the potential the water is, or the EMA or the blue tracer is, then I would wait for the trap and break. Okay. I wanted to ask, how many candles are there in the blue box? I'm having trouble with my template. Oh, so use the FXCM demo, right, or the Trader's Way demo, and then you will have, and then drop the template and everything else. Then just use that, right? Use the Trader's Way demo or the FXCM demo as your measuring stick, so you don't have to figure out who's got what, because I don't know what your offset is. Your GMT offset is based on your broker. So if I tell you it's going to be so many candles, then you're going to get all messed up, because it depends on when this closes. And for me, this closed at 5 p.m. Eastern. So from here to here is approximately 32 candles. Right, 32 candles. That the box consists of 32 candles. All right. My broker is moving my template every now and then. Yeesh, that's not good. How do you know when to get out of a trade and where to exit? Okay, good question, right? How do you know when to get out? All right. So for example, here, 1350 cross, first pull back. That's a beautiful ID move, short. I know it's early, right? Always first thing you look at is natural targets. Well, what are natural targets, right? Blue tracers, EMAs, and the boxes, top and bottom of the Asian box. Natural targets, right? Because think about it. On the 4-hour chart, we have something called the Isley channel, these channel, right? Steve called it the psychological high and low of the week. So price tends to gyrate inside this Isley, and then once it breaks above, then this becomes support, and that's why it goes above it, bounces off of it, right? Look at any one of these, right? See, it breaks above it, this becomes support, it comes in, it bounces off of it and goes long, right? GA. So this one kind of breaks below it. You see how it bounces off it? Doesn't mean it's going to drop, because I'm in peak formation. It doesn't look like it's going to drop, but that's what they tend to do, right? They create these barriers. You see how they go up there, they bounce off of it, they roll over, and then they drop. Okay, so that's why the Isleys is almost like the Asian box, right? So you got to be careful with the top and bottom, initial high, initial low, and then they start trading inside this range. See, that's why sometimes they'll come in and then they'll bounce bottom, and that's why we have the AR00, or they'll come to the middle of the range and they'll bounce off the water and the middle of the Asian box. All right, so Asian high and low, if the boxes are pretty far off, right? This, for example, the box is so tight, so I'm not really concerned. I'm pretty sure it's going to break right through it, because they've been collecting contracts up here, so they want to trade away from that peak, right? So my target would be definitely the blue tracer, right? So more often than not, target either the blue tracers or the EMAs to get out, natural targets. All right, there will be some that's going to go 1 to 1 or 1 to 2. So for example, if I took a 1/3 pullback, my stop is right up here. Let's say it's 3 pips, right? And if I'm going for 2 to 1, I'm going to go 6 pips. I'm going to hit my TP right here on this candle. By the second candle, it'll be done. So I didn't even get to the blue tracer. All right, so if I'm going to go 1 to 2, that's my move. If I'm going to go more, then I have to literally manage it to a natural target. Okay. So I know this is CAD Swiss, not a pair I normally trade, but here, see how they threw the spins? But then I would just pass on this move. I wouldn't take that trade. Granted, the second one ran, but I wouldn't take it. Right? Because when they throw these spins, I don't know if they're going to keep this volume trapped, then they're going to go sideways like this. Alright, but if they trapped it, then I would take these trades. Right? See? Induce, come back. They use the blue tracer as resistance. They bounce off of it. AR50, ARID combo, right? First pullback. I go short, put my stop above there. Boom. Right? Now, if you're going 1 to 2, you didn't get it. Right? So if you're looking for 1 to 2 over here, you didn't get it. That means you got to move your stop to break even. Right? It all depends on whether this is level 3 and you're sitting in level 1, you're expecting price to go long instead of going short. Right? So you have to, that's why it's kind of sort of important to know whether you're going long or going short, what the market maker cycle is. Then you can, when you take these bounces, that's when you can go 1 to 2, 1 to 3, whatever it is. If you only want to do that when you're trading in line with the trend. Right? So if I know my trend, I'm getting off this reset here and I'm looking for shorts, and I know my trend is set correctly, then I can hold the trade for 1 to 2, 1 to 3. But if I'm taking a counter move against the prevailing trend, I don't want to do that, because then you're not going to get it. Right? Awesome. Okay, I think there's no more questions here. All right, Phil. Awesome. Do you need the blue box? Well, I mean, Steve does it, right? The blue box is, you know, where you can watch the stop hunt happen, right? So if you're looking for a safety trade, you're waiting for them to come above it, give the stop hunt visible. It's called a visible stop hunt, right? So that's what that purpose is of the box, right? Come out of the box. Remember Steve's, look at Steve's 4-day course, right? Come down the box, they hit the stop high, roll over and drop, stop and high drop, stop and low rise, that kind of thing. So that's what that Asian box is for, to identify the stop hunt, the visible stop hunt. Right? Awesome. Okay, guys, have a great weekend. I will post the pre-market a little bit later on. Okay. Remember, this Sunday there will be no Sunday session. For those of you in the US side, have a happy 4th. Take care.